welcome back, Mish. This week, I was reading your article. In fact, I think it was just yesterday about China. And what grabbed my attention wasn't China, it was the monthly charts. And we talked about the monthly charts in the previous video, and I got some questions about it. And so I started thinking, we should just focus on monthly charts in one conversation. So these aren't very long, so let's just spend the whole time here focusing on what you really like about monthly charts. So I've got China here. Let's start there unless you want to start somewhere else. And I'm going to ask the question that I think most people would want answers to, which is what's the most important part of a monthly chart and why even look at it?
Okay, well, remember a few weeks ago, Geoff, we sat and we talked about how I'm big in the media, partly because people kind of gotten this impression that I was some sort of a macro economist, and I'm not. And we talked about how the economic modern family really basically makes me the macro economist, because if you could look at them, you could kind of make up a story based on what the price is. Well, the other half of that is the monthly charts. And the reason why is I've done a lot of research. First of all, the 80-month moving average is not an original concept. It came from the Aiden sisters, and Keith has been a big fan of the Aiden sisters for a long, long time. He was a subscriber to their newsletter forever. He got me excited about the 80-month, God, years and years ago. And then we added the layer of the 23-month, which of course really basically is a 2-year cycle, a little bit shy of it. And then as I did more and more research about those two monthly moving averages, I started to realize that there's work, and I don't remember the name right now, but I did it at this webinar in the Money Show a few years ago. It was the name of a guy who actually invented refrigeration, essentially, but he came up with this idea of 2-year business cycles within longer business cycles. And I started to understand that the 23-month is like a 2-year business cycle. And the 80-month was kind of like a 5 to 6 year business cycle. And we know that cycles generally come in that time frame. So that's kind of what got me interested. And then as I just studied chart after chart after chart after chart, I realized that from a macro perspective, if I go on and talk about the fact that, well, we're in an economic contraction, or, well, we're starting to see the signs of an economic expansion, that really I was just basically describing this chart without having to show a chart. So if we look at China, here's a classic example. Now, Geoff and I were talking before we started the recording, and he said, oh my God, this has basically done nothing for almost 20 years. Why would you even be interested in China? Well, if you go back to 2005, 2006, 2007, it had a massive run up at that time. And when we were crashing in 2007, 2008, China actually outperformed. But since then, money has come out of China and more into the United States. And of course, during COVID, they had their issues because they stayed closed longer than we did. But now the stories have been, and that's why I wrote my daily, all about the fact that China is adding a lot of stimulus to the economy. But does it really make a difference? So that's why I love this chart. But even before the announcements, so if this is October and August, we started to peak our head above the 23-month moving average, which tells me that the worst of China is over. I mean, we had a couple of bottoms there from 2022 and then early 2024. But also, we could see here that it broke out over the 23-month in August. Then September, it had a really nice move up. And now with the announcements of the stimulus, look where it stopped at the 80-month. So now I have two ways I can look at this as. I can say, okay, China, the worst is over, but yet are we really in a major expansion? Not until we clear the 80-month. So that's kind of what we talked about here. And we can also see, interestingly, if you look at the top of the candle from September and the bottom of the candle from today, 32 is that number. So that means I got a number to pivot off of, 32. And of course, if we take out that 80-month, looking left, we can see there's been a lot of chop, but it's possible that we can get a move at least up to 50, maybe even more. We don't know that. We don't have to know that right now. We also know that we have a limited amount of risk here. So that's, to me, tells you that China's interesting, but it could get a lot more interesting or not on the basis of this chart.
So let's look at some other charts. I know the charts we're going to look at, they're not necessarily going to be what I'm suggesting, but it just occurred to me because, our debate which you're 100% right. I tend to shun stocks that have a lot of overhead, but um, I totally understand why down here is attractive to some. And clearly, my response, even with my negativity, was, call me when it gets over 80, which is exactly what you're saying. So my question, as we look at the other charts, whether this was China or not, if this was our market, I'd be saying, okay, let's find some charts that are already don't have all this on it, and they're over their 80. The equivalent of in a bull phase, only the bull phase would be defined by monthly, not by monthly, not daily. So with that, let's go to the other charts because I don't want to ramble here. Where do we
Yeah,
want to
and people
start? Like Baba was one of them.
and
You want to
China
start?
is a very exciting conversation for me right now because I've been doing a lot of talking in Singapore, and I will be on Bloomberg Hong Kong soon. And so, obviously all of Southeast Asia is looking carefully at it as well. But anyway, let's move on. What was the next one we were going to do? TLT? Or which one?
Well, I was going to pull up some stocks, so some quick stocks. We also
Ah,
looked at KWeb. So Baba, for example, before you say anything, here's my pessimistic point of view. Right, so the thing's in a really crappy trend for years, but now it's bottoming. Right, it has come through the 23. What I like better about this one than FXI is if all this thing does is go back to the 80-month, it's a 50% move.
correct.
And there's not a lot there to get in the way of that.
Yeah.
So yeah, and this is a much different looking chart than FXI, which has done nothing for 20 years.
Yeah, and by the way, I mean Bob, who is watches our videos every week and has been commenting to me on X, made mention of like, Mish, how do you figure out a bottom? Well, here you go. This is exactly how I figure out a bottom. I get interested in something. Alibaba obviously is a huge company, and I actually bought it at 69. And then I've sort of missed this last run, admittedly. But like you say, if this thing is really getting started, this is me picking a bottom based on the evidence of the fact that the bottom looks like it's in, and it definitely looks like it's going to expand. And like Geoff just so eloquently said, it can go to 150 and stop there, but hey, we'll get out. That's fine. That's a beautiful move. That's almost a $50 move from where it's trading.
Let's just look at Baidu, and then I don't know if there's another China one, but we do have the US to contend with. So
Yeah, let's look quickly here. Now, what really interests me about Baidu is this is another huge company in China, obviously, but so far they haven't gotten the memo. They haven't gotten the expansion memo yet. So that makes this pretty easy for me, even though it's been over the 23-month a couple of times, as we saw in 2022 and 2023. Not only did it never get over the 80-month during that period of time, but it hasn't even gotten over the 23-month. So I would be inclined to have a starter position when and if, considering what we just saw in BABA and FXI, if this actually got over the 23-month and closed the month out above it. Remember, it's a monthly chart, so you want to see a monthly close above it, not an intermonth, and then, it crashes at the end of the month.
yeah, you said it nicely when you said they didn't get the memo. I would have said, especially if we weren't on this video, why are we even wasting our time with this piece of junk? It can't get over the 23 month. I mean,
Oh, well,
even
one man's junk is another man's treasure. That's in my book, Geoff.
you can have all my treasure.
Hey, some
Let's
of
go.
our trades are like this, though. I mean, this is what I excel at.
No, I know.
Everybody's a
I know.
genius in NVIDIA, but how many people were calling out China and Alibaba months ago? I was. So there you go. But anyway, let's move on.
Yeah. My point is, I'll wait till it gets over the
All right, so
20.
let's go
Right.
US. Let's talk about you
I
put
did TLT. Yeah,
Good.
yeah.
I'm so excited that you put this one up, TLT, because this is classic of how I use a macro based on the long bonds, which we know is part of our whole big view in terms of risk on, risk off, what you're measuring it against. So I don't want to spend too much time historically, but if we just look back, to me, let's not even go back before 2018. Let's look at 2018. And in 2000, did you put the underscore on there?
I did. Yeah. We were looking at it
Okay.
without the
So
underscore
in
before.
2018, we had that little taper tantrum at the end. You could see it was kind of holding that 80-month, But then we had that taper tantrum when the Fed came out and said they're going to raise rates, and the market went down like 10%, like in a day. And then they went, never mind, never mind. Well, even long before COVID, you can see in 2019, the 23-month and the 80-month were so close together that they actually started to get real interesting. And then we had that great trade in 2020, but really in 2019 is really when you could see that the Fed was getting nervous about something, because all of a sudden the yields started going lower and lower and lower. The TL started going higher and higher, of course, until post-COVID, when everything was at 0%. And then, of course, as we were getting into 2021, when everybody was still really, really bullish, I was starting to get a little bit more negative in the market there because it broke down under the 23-month. It took one rally to try to get close up to it. As everybody started to get bullish again at the end of that year, I was like going, no, not bullish. And then boom, we had that big crash. So what's interesting to me about this chart right now is really it's been since 2022, if you want to call it that. So 2 years of the rates gone up, and now clearly we can see that the rates have stopped going up. And even though the Fed lowered by 50%, the yields have gone up a little bit, but look what happened. And that's why this chart is confusing me, Geoff, because before it showed it held exactly on the 23-month, and now it looks like it broke down below it.
Yeah, that's because before we didn't have the underscore.
I see.
But still, the analysis is the same that we were talking about before, with just a shift in perspective, and that is that right now it broke the 23, right, and it's back down below it. We don't want to see that, but what we do want to see in both cases is that if it takes out that recent rally high, what most people aren't going to know is that for the first time in 2 years, we're back over the 23.
Mm-hmm.
And even what we were talking about before is that, yeah, this is a level of support in here, but really we want to see it hold here, and we want to see more momentum on the upside. And if we get that, it's more significant than what most people would attribute it to if you don't understand how important this 23 is.
Exactly. And
Right.
also, by the way, I used the 23-month. I was long TLTs from around 94. I took some profit at 99 because I knew 100 was big resistance, but I basically held the rest until it broke down under that 96 level, or 97, 96, which is where the 23-month was. I just got out of the position, and I'm like, I could be patient now and wait. Because like you said, if it gets back over and it takes out 100 again, not only is TLTs a good buy, but what that tells you about the rest of the market will be interesting. So that brings us to our next chart, which is XRT, I think. No.
Well, let's go KRE. This is
KRE.
why. One, because it's going to relate to rates, and two, because if you look at this pattern right here, and then let's go look at KRE, and we can wrap there.
Yeah.
So underscore KRE.
Okay, we had a whole conversation about this before. So KRE, obviously, if you look back, I mean, you can see it was in a nice uptrend. Yeah, it's had its up and downs, but we never really broke down, except for during COVID, the major 5-6 year business cycle. And then obviously COVID, everything shut down, and this really crashed. If you look at NASDAQ, by the way, it never did, but this did. And then, of course, when the Fed's starting to pump the rates, there you go. It started to go back up in 2021, clearing both the 23 and the 80-month until it peaked out also with the rest of the market at the end of 2021 into 2022. And then if we just move to 2023, when we had that mini crash in the banks, you can see that it really came off hard. And it's been relatively uninteresting. I've been talking about the trading range between 40 and 50 until a few months ago, when it finally took out that 50. Notice it took out the 50 level. At the same time, it took out the 23-month level. And now notice that same month, it went back over the 80-month. And if you look back at 1, 2, 3, 4 months now, right, or a third of the year, it has now been trading above that 80-month with such a clear point of 60 being the next level for this to take out. So much information just from this monthly chart. Number one is the worst is over potentially for the banks. Number two is with the easing or the potential easing of the rates. This is also tied to IWM. This is possibly getting excited about the fact that that'll be easing up on the conditions a little bit, and people might go back and borrow money at a more robust pace. And number three, it's telling us that even though the growth stocks have gone skyrocketing, there could be a huge opportunity in some of these other areas as we get into 2025. And number four is you have a really good tight risk. If it breaks down under the last 4 months or the last 3 months lows, you're out. And if it breaks out over 60, you take a shot. And there you go. I mean, that's how I'm using these monthly charts. More of a give me an idea of what to expect. So let's go to the last one, because I know Geoff said to me, do you really want to talk about XRT? That's all we talk about. Because it's the most important part of everything that's going to happen to us right now. I've been saying this everywhere because the consumer has to hang in there. I don't care about NVIDIA. I don't care about Palantir. I don't care about any of that going forward. What I care about is, can the consumer hang in there? And what will the consumer tell us? And that's where the monthly charts are fabulous, again, because in 2023, when everything looked terrible and everybody was talking recession, XRT held that 80-month. Like, I remember talking about it. And some of you who've known me for years will remember me saying, unless it breaks 58, I can't get bearish. It's hanging on to support. Where do you think I got that number from? Right here. So it held. Then again, it took out earlier in this year, the 23-month. But since then, it hasn't done anything. It's just been in this range, but it does show an expansion here. If it can get through 80, that's my number. I'm talking about it on a 10-month basis if you look at a weekly chart. But if you look at the monthly chart, here's your months right here. Gets through 80, you're in an expansion, you held where you needed to. It correlates with KRE, would most likely be over 60. IWM would most likely be over 227. And this will be, if over 80, another great opportunity. Plus, you can tell people to shut up about a recession, because really, basically, it'll be telling you that the consumer has taken a pause, but hasn't even really kicked into gear yet. Not the way it was back in 2020, when consumers were spending money getting stimulus checks.
Yeah, I mean, this is obviously an extraordinary period with COVID, but if there's fear of a recession, this is the kind of action we're going to see, right? So here's what it looked like at the end of 2018, when people were panicking that the Fed was going to rock the boat, and so you'll know it when it breaks down.
Exactly. And then when everybody was talking about a recession and the Fed was going to kill everything in 2023 because they'd raised so much, you could see right here that the consumer was impacted. But even with inflation and everything else, it held where it needed to hold. So this is telling you the consumer right now could get stronger, could get weaker. We don't know it yet. But what we do know is that between everything we just showed you, the TLTs, the banking, and this, you have a pretty good idea of what's going to happen after the election if you want to wait another couple of weeks, which may not be the worst thing in the world to do, considering we don't know what's going to happen. It's been such a kind of a dead heat in terms of the polls. So yeah, and a lot of it will be psychological anyway, because nobody, yeah.
So that you brought up a good point. We can't go down this rabbit hole, but if the election creates all kinds of chaos in the daily charts, this is where you want to look, the monthly charts. I mean,
that's exactly
we don't have to say any more than that. And if you don't believe us, just go look at a whole bunch of charts on the monthly charts and look at the COVID period, and you'll see the stocks that were really strong got a little rattled during COVID, but they went on to do what they were doing. I think that's the same thing with the election.
Right. Me too. And that is the best tip to give you guys 2 weeks before it.
Yeah.
So.
Yeah.
All right.
All right. Let's call it a wrap. Thanks, Mitch.
Right.
That was good.
All right. Thanks, Geoff.
Talk to you later.
Bye.